And the stock market reaching new heights today, marking the longest bull market run in the history of the exchange. A bull market is a sustained period where stock prices rise and when investor confidence is highest. It's been 9.5 years since the last recession. The Dow Jones Industrial Average now hovering around 26,000 points, the highest mark ever in its history. To break down what this all means for us, we have Garo Ellis, financial advisor and co-founder of MoneyWise Wealth Management, joining us live in studio. Garo, thanks so much for joining us here. Talk about this milestone today. If I'm a first-time investor or if I'm someone watching my 401k getting ready for retirement, what does today mean for me?
Well, I think one of the things it means for you is that you stuck to a strategy, and with the market got you to possibly to another step toward that goal. But as far as the bull market, like you said, it measures a period of time where the markets are up without experiencing another bear market. So you haven't really seen a huge pullback. We saw one in 2011 down 19%, but we haven't seen that typical bear market 20% pullback since 2009. So for investors, they should stick to the strategy. It depends on your time horizon. If you're young and you can suffer through possibly another pullback, because we think one possibly is going to come with the valuations we're seeing today. But if you're nearing retirement, then now is a great time to visit with your financial advisor and balance out those portfolios and stick to a strategy.
Well, let's talk about timing. Of course, if you watched the news yesterday on the political front and in the Trump White House, there was a lot of chaos surrounding yesterday in politics, of course, with the news of those indictments and charges coming from Paul Manafort and Cohen. Let's talk about politics and the economy. Is there any correlation? It seems like if there's a bad day for the Trump administration or for the White House, the economy seems to weather that storm pretty well and hasn't seen any pullbacks.
Yeah, because the economy's spending. The economy is run by 75% of consumers, you and I, and the rest of it's business, the rest of it's government. And if the politics doesn't affect your spending, then and you're still putting it on that credit card or spending your money in savings, that's a good thing for the economy. But again, if we're getting overextended on debt, that's a different issue. But politics, you're right, should never enter into your change in your strategy for retirement or other goals that you might have.
And you made an interesting point earlier. The market seems to sort of be almost okay with what's happening in the Trump administration. It doesn't seem to be bothered by it. You mentioned, though, the tariffs now could be a changing part in this game. Do you see any concern there as we now head towards midterm elections and head towards the new year and these tariffs added on to that, we could see a pullback?
Well, that's a great question. I mean, because, first of all, Trump's agenda was good. So the market, we call the Trump trade, the market went up, whether it deserved it or not, or whether mathematics justified the valuations that we're seeing. As far as the tariff talks, that's a different story on your international stuff, because we're seeing where they're talking about the market's doing well. The S&P 500's, hitting another high here. We're in the longest bull market in history. But you got to look at the tariffs affecting your other parts of your portfolio, because if you're just invested in United States stocks, you're probably doing the wrong thing. You got to diversify into emerging markets and international. Well, we're seeing those are down for the year based on that talk.
So if you haven't invested in overseas markets, you're saying now would be essentially a good time?
I would say so. I think there's more value being seen in emerging markets and international. Not to say they can't go down further based on all these talks, but I would drip into it, meaning just a dollar cost average. 401ks comes out monthly, so that's dollar cost averaging. You're putting into it gradually every month. Comes out of your paycheck, goes into the stock market. I wouldn't just have it go on the United States stock market. I'd look at emerging markets and international.
Let's talk locally. If you're someone whose money is tight, if you've just started a new job, what is the best advice for a new investor in this market? Again, we're talking about the highest rates, the highest numbers on the Dow we've seen. Is it still a good time to get in, or should someone waiting to invest wait for that big pullback to come before they jump in?
I think it's a great time to get in on a diversified portfolio. Now, what we're talking about, see, when the markets, they only talk about the United States stock market, the market hits an all-time high. The market has a bull market, but what about the rest of the markets? The markets, to me, isn't just the S&P 500. We have the bond market, we have the emerging markets, we have international markets, we have the United States stock market, we have international bonds, emerging market bonds, and the list goes on. And so if you're diversified and stick to a strategy for retirement or whatever goals you might have, and your time horizon, your objectives, that's the strategy you should stick to. And I think, yeah, now is a great time.
All right, Garo Ellis joining us live here on a day when the stock market saw record numbers. Garo Ellis and the MoneyWise guys, you can catch them weekdays on Current 1180, 96.1, noon to 1. Garo, thanks so much for being here with us. We really appreciate it.
You're welcome, Tim. Thank you.
All right.